I've gone ahead and started the recording, so good morning. Officially, welcome to the Market Watch Group Weekly Market Prep. I am Scott. What I'm saying is that we will not have, for anyone who's listening to the recording later today, we will have no events tomorrow. But if you want to come, there will be a few members hanging out in the Meetup channel at 8:30 p.m. Eastern around the normal happy hour time for Monday. But because we are postponing, we are not canceling, we will meet on Tuesday for a market open at the regular time. I haven't made the adjustment to the calendar yet, but I will. So if you try to go into a Monday, you'll be like, oh, there's no event here. And then you'll go to Tuesday, you'll be like, oh, that's why. So I do love the calendar feature from Discord. Let me know if you have any questions about that. Michael, love it. Are you going through like the formal process of an LLC? I've seen some places that even have you do like an S corp and an LLC, and the LLC manages the S corp as a setup. So yeah, I mean that's a again, congratulations. But on top of that, certainly post some of your journey for what you're doing as part of that. Like what are the formal steps that you're taking? Because others have, would definitely benefit from that. Having an LLC is a beneficial thing. It does allow you to write things off, things on top of and beyond trading. So, yes. A meeting with an accountant Thursday or Tuesday. Is that a specialized accountant? Way back when I did some presentations and some collaborations with a group called Traders Accounting. It was an outfit. I don't know if they exist anymore. This is way back when, and they're the ones who showed me some of the constructs they had, and I followed suit with some of what they do. Steven said with an LLC. Yeah. Very nice. When the IRS gets concerned is if you declare yourself an active trader and try to have mark-to-market status, because there are some definitions. There are some definitions that are pretty ambiguous that I don't know. Yeah. Michael, please, you can see there's others have done some look into this. When you have your conversation and come back, give us like the gist of what your guy told us. That's awesome. I'm glad you're sharing that with the group. Super cool. Okay. So yeah. Cool. No meeting on Monday. We are meeting Tuesday morning at 9:15 a.m. Don't forget, we're not brokers, we're not advisors, no recommendations, no advice, education, illustrative purposes only. Let's do the usual. I've had to do a bunch of updates, but I think I got things back where they should be. So I am going to let's get this up. Profitable last year, even with the write-offs. And yeah, I mean, think about, one of the things I've done is I retrofit. So if I'm going on a trip, I'll look to see if there's any kind of events, like, is there a trader event there around that time? And that all of a sudden makes it so a lot of things become deductible and, things like that. Yeah. I do a lot of talking with other traders. Anyways, it means my cell phone gets written off. clearly you can't trade without the internet. I mean, it goes on, right? Just little things that you wouldn't be able to otherwise. Market posture first. We'll look at the economic calendar. Quick preview. It is a employment week of data. It's the first week. I say it's like so strange. I can't even say. I can't even close the panel. Interesting. Very interesting. Wilbur, hey, good to see you, Wilbur. Yeah, we got a good group this morning. Howdy, anyone who didn't see it. Sector searching, maybe. I think we'll do any searching on Tuesdays and Thursdays. I actually feel like I'm going to take that out of this agenda so we don't feel like we're pressured to it. This is all about context and overarching decisions that carry forward into the week. Good morning, Bob. We'll talk about our watch list and the maintenance. I feel like it's pretty strong right now. If there's anything missing, I would say we would stand to benefit from maybe industrials and consumer discretionary and maybe we should search on Tuesday night. We have an hour and a half. Maybe we'll do some searching to start it off with. That sounds like a reasonable plan. Okay. Couple of trade alerts last week. I think one's around break even or slightly better depending on when you got in, and one is doing pretty well. Oh, where's my screen? Sorry, hold on one second. A problem was detected. No, okay. Sundays are the worst with Thinkorswim because I'll check it and then we'll start and then it'll just shut down and I'll have to update it. Yeah. I think Wilbur's come a few times before, and if I remember, if my not so great memory serves me correctly, he's a bit of a seasoned veteran. Actually. So, Wilbur, correct me if I'm wrong. Posture. He may have exaggerated. Nah, that's it. You're a seasoned veteran. You've been categorized. That's funny. Oh, well, if you're looking to get better, so am I. So welcome to the club. This is the Blades of Grass Club. And if anyone doesn't know what that means, let me know. Oh, like I'm missing it again. Like this document doesn't... Okay, you guys, I'm not sure what's going on here. But it's like it didn't save. We did this last time too. Steven's shaking his head right now probably because he's like, I've given you better ways to do that, Scott. Steven, I know you have. I just get busy with trading and other things once we end. No, Bob, the LLC can't go into a or an IRA can't go into an LLC. unless you're saying you want to open an LLC to trade, like, is that, maybe I don't understand what you mean, an LLC for your, because your IRA is already taxed. Like, the whole point of the business is for tax abilities, but your IRA is tax deferred anyways. Yeah. Let me go. That's a good way to put it. All right, you guys are going to have to refresh me again. I couldn't remember. I think this was 1.25 and this was 0.5 and this was 1. Does that look right? No. It was more than that. This was 0.75. You don't see my screen? No screen. It tells me it's streaming. That is interesting. It said it was on. What is happening? How about now? Oh, well then when I was talking about not having my spreadsheet ready, I was just messing around. It was ready the whole time, you guys. I was just playing. All right. Does this look right to everybody? Let's get in here and do this. Let's get to work. Okay. Did we lose somebody? I thought we had 12. Sometimes people pop out and in because they think it's on their end. SP. Oh, we do have 12. You're right. So maybe I just need more coffee, you guys. That's on me. Okay. Let's go here first. We ultimately advanced. I mean, it was a bit of a hanging man candle more than anything, which tells us we may be hitting some long-term resistance at the old high. We could just go right through it, no problem. Like, right through it, no problem. I don't want us to see this and say, oh, that's a hanging man, that's going to drop. No, that's a hanging man if it's already started dropping, right? It has to confirm. Otherwise, it's just pausing. You had the same thing right here. And then it went boop, 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 up for 6 more weeks right after that. So that is not a, hey, let's expect that it's going to drop. That is not what that candle means. But that's unfortunately how traders sometimes start to interpret candles. So they are not self-confirmed. They have to have more. They do give us cause to pause and evaluate, but not anticipate that it's going to drop from here. So for me, we're firmly in this green trend again. Whose idea was it for these colors? Was that Sandy? What a great idea that turned out to be. Or whoever it was. If it was someone else. It was Bob. Bob went. Sandy said to change the weight and make him thicker. Bob said change the colors. Teamwork to make the dream work. Yeah, you gotta love it. You can see him. Now there's an argument. Someone said colors, someone said weight. Either way, you can see our progressions and what's going on, right? You can be like, oh, maybe it comes down and bounces. I don't know. But it looks good now. The score stays the same. Let's just move on to the 6-month daily. Okay. Now, 2, 3, 4, 5. So we started, this was Friday of last week, and then it was Monday. So we started here, and we ended here. So did we get anything new? I'm kind of feeling like this is a higher low now. We haven't, I don't know. Oh, it's tough. This one's on the fence for me, guys. This is where I could use some help. I'm going to talk through my thought process. And where is it? Is it coming up? My drawing tools? Okay, there we go. Let's hope these are working. Now, the question is, do we now consider that this is a low? We haven't taken out this yet, but we do have the stochastics turned. Also, did you guys notice this little gem that snuck in at the end of the day on Friday? That nice little volume piece, was that? I believe it was. Let's just check. We're not there yet, but it looks visually like it was. 54 average. We got 8 more than that. Yeah, that's 115%. So the question is, do we call that now a higher low? If so, it's a plus 0.25 on the short term. If not, we didn't achieve anything new last week, and its score would stay the same. That's how I see it. Do you agree? Do you disagree? Then it becomes a vote. So that's where we are now. If you think it's a higher low, you're an A. If you think it's not a higher low, you're a B. Gray Lynn's already voted. The polls are open. Michael says yes. Sandy says no. Press says no. Steven says no. Can I repeat the question? Yep. No. Not at all, my friend. So what we're evaluating is whether or not we're going to give it this 0.25 or not, and how is based on whether or not we think this achieved the higher low. What it did achieve, you can see, is it did get the stochastics pinch, and it did bounce, but it didn't take out this previous point. So it's kind of like right at that is it or isn't it level. And so what we're saying is if we think it is a higher low confirmed, we're going to raise our score a quarter point. If we don't think it, we're going to leave our score the same. I've got 1, 2, 3 B's, 4 B's. I've got 1 A, 2 A's, 3 A's. I was leaning towards a yes. So I'm an A. And Michael says it. Mike, you're right. You're right. Hi, 563.68. Oh, so here's what's funny, Michael. The wick is 563.68, and we closed at 563.68. We literally closed at the wick. And if you look back here, 563.91, this was a little higher, Bob. That's why I'm saying it's not a higher high. We didn't take out the price that we hit last time. It's literally to the pennies where we're just like, is it? Isn't it? Is it? Isn't it? It could go either way. The last 30 minutes of the day was bullish. Miguel said he's an A. Bob just said A. And now we hit the tipping point. I'm for the group score, which is my score. I'm going to say A, and I'm going to give it a quarter of a point. Obviously, those of you who voted B, you're going to leave your score the same this week. And what's going to happen is next week, for taking out highs, yes, when we talk about higher highs, it needs to get above and beyond all of this, right? All of this for a technical higher high. Now, we're saying that we are calling it a higher high, those of us who are A's, or excuse me, a higher low. Even though it's sitting right at those same levels, we're still saying that happened. That was a good discussion. This is where I want you to see that it's impossible for there to be a formula for that. You can't have you got to have the ability to look at it, think critically about it, and then understand what the implications may be, and then give it a score. And then that score is representative. And if you decide it was too much or too little next week, then you adapt and you make the adjustment. But this is what market posture is about. It's not about like we have a formula and we try to run. It's about like, let's understand this market and what about this? We don't score volume now. It's hard to not let that be like, hey, but also there was volume. No, we have to find it up here. That's the rule that we're following, is we're only letting short term guide our understanding of this right now. So Miguel saying, hey, that last 30 minutes where the sellers just closed it down, that was beautiful. I'm going to let that push me to the A. That's the same kind of a thought process where if we're a little uncertain when we're doing our sector rotation, we go to the 20 and say, hey, what does the most recent tell us? That could maybe push us off the fence. It was awesome. That was super cool. Great discussion. Phenomenal discussion. And we go to 1.5. Oh, and now this was a sneaky day here. So now let's go back. Here's another one where we're going to have to put some discretion in, right? We're going to have to, because what we have here is our big chunky 1, 2, 3, 4, 5. Our big chunky volume, this right here, and let's even include this. This is now getting stale. We have to decide. Do you how much weight do we give this? Because we have a negative, positive, negative, and then that was nothing. And then we had nothing, and then we have this. Right? But all of this, we'll not even count that. All of this is gone by the end of next week. So it's stale, right? Technically, I have 4 bad days, 2 good days. But tomorrow I have 3. Tuesday I have 3. Wednesday I have 2 to 1. And by Thursday, this is a 1 to 2. And by the end of the week, it's a 0 to 1. So this is what's happening. So I feel like I feel like we should score this more favorably, right? I feel like it should be. So at the very, very least, this would move from this would be a minus 0.25 score. This would be a 0 score. And by the time we got to the end of the week, it's a 0.25. So I think what I'm going to do is move mine here. And then if by the end of the week nothing's changed, then we will move it to a 0.25. And if we get an extra volume day and this gets to a 2, then I maybe would even jump it to a 0.5. Give me your thoughts on that as how to score this thing. Now, sanity check. We started here. We ended here. Slightly positive for the period and my volume is scored as a 0. That makes sense, doesn't it? I mean, that feels like it jives. Now, Steven went to a 0.25. Okay. You have a slight upward angle. Acceptable. If you have a 0.5, that's too much. You can't really, I don't see how you could justify that, right? Like, again, we're not here to say, like, you have to score it a certain way, but you have to be able to defend your score also. So 0.25, yes. 0, yes. If you're still a minus 0.25, I mean, look, I'm not going to argue with you, but I would say, yeah, be careful that, we aren't letting this old be too influential. All right. How did that help, Miguel? I don't want to score the future. I really am trying to score what we see. But in this case, what we were doing is saying, hey, we have to recognize the fact that all of this negative volume literally disappears by Thursday, right? 3 of 4 selling days. By Thursday, if we analyzed again, it would be completely different. And so what we're doing is we're saying, let's get ahead of that a little bit. Even though it hasn't turned yet, our technical score is still 4 selling days to 2 selling days. But we're allowing a little discretion to kind of be like, hey, if we want this to be really in line with what's happening, it should reflect that. Again, be water, even with our analysis. We're not trying to ever be dogmatic about that. And Sandy's right. That's a great point she's making, that I do tend to discount that last week when I'm like, it's stale. We can't give it as much weight as the other ones. It's almost like an exponential moving average. The stuff that just happened has more weight than the stuff at the beginning of the formula, right? And I think that's just a common technique. Okay. And Steven has a somewhat discretionary reason why he went to a 0.25 instead. He said, because this is the first positive move, he's gonna give it that 0.2. Great. Yeah. You can see there's always a range where you should be able to, justify where the position is. So, okay, here we go. I think we're gonna see maybe the VIX too. Major market, I don't see any way it's gonna have a better score. I could be wrong. I don't know why. There it is. Okay. What have we got going on? We've got the NASDAQ on top, S&P on top, Russell near the top, Dow lagging behind. How would we start our basis, our foundation? I would describe this as a bullish foundation. This has a bullish look to it. Press, yep, I agree, 100%. So that's how we kind of move. We don't have to score that, right? We're just saying, hey, that's a bullish start. Do we keep it? Does it get stronger? Does it lose strength? We go to 133, same basic picture. Not a lot as to who's leading. You can see it's just kind of mixed between the Dow, the NASDAQ, and the Russell, but more in a leading. Yes, Michael. So you probably went through stock charts to get yours. And if you look at my link up here, I used to be able to get the RUT, but I've had to change. So I have, look up here, I have Index, CompQ, then I have IWM. It still says Russell, but you can see it actually says Russell 2000 iShare. So I had to put the small cap ETF in with the indexes but yes, Steven's right. The link for this is in Trading Resources to make sure that it comes up this way. My sector is different too. I took real estate out. I don't put real estate in there. I don't look at as a sector per se. I mean that doesn't mean you can't, obviously, but that's the explanation. Okay. Great observation though, and it sounds like you were trying to do some work in the stock chart site to pull theirs up. It's a cool feature. This I like the way they do their comparative charts. Okay, let's go to 66 days. Boom. Oh, and that's what Steven was talking about. He said he saw the Russell pop. Bam! Look at that. It popped on up. It's only on one time frame. We need the Russell leading on multiple time frames to give it that full one score. This is the first time it's popped up there. Additionally, just to note, so did the Dow. So one of the questions I have been and will continue to ask is any strength that we're seeing from defensive-oriented components, such as consumer staples, such as utilities, to some extent healthcare, the Dow. The question we're asking is this strength make us think that it is defensive in nature, or does it make us think that it is more breadth and growth oriented in nature? Because if it's just broadly bullish, the defensive boats go up with the tide, just like everything else, right? Sandy's leaning more breadth / growth. Steven's leaning more breadth. I am also leaning more breadth. I think that is exactly the implication of it. So I'm looking at this thinking I'm not going to raise my score, but I'm also not thinking that this move from the Dow is defensive. And I'm not that concerned about the NASDAQ being at the bottom on the 66-day chart. Or is it defensiveness and bullishness playing out? We'll keep an eye on it. Right? Let's go down to... So basically we had bullish on the 200, bullish on the 133. And here we have a small pause, a consolidation from the NASDAQ, but we still have the Russell leading. So it's still a growth-oriented lead. We're still going to keep our score at 0.75, right? But if we see... And here we're not getting much of anything. Here the Russell's back at the bottom. And the S&P's on the top. So a bit mixed, but overall there's nothing that doesn't look growth or bullish oriented in this analysis. So for me, I'm going to keep my score the same, 0.75. Okay, let's go to sectors. Sectors has been flat for 4 weeks, which has been interesting. I keep thinking... Yeah, sorry, I forgot to ask. How does everyone else's score look right now? Is anybody at a 1 on their major market? Is anybody, down as low as like a 0.25? Anyone at 0.25 or lower? Seems like probably I would say the range is 0.5, 0.75. 22 day doesn't really do much, does it? Right? When you look at it, it's just more of like no reason to change based on what we've done. From Zacks, the previous quarter, yeah, we talk about the mighty 7, the big 7, magnificent 7. Many investors correctly attributed positive to the magnificent 7. These companies are still posting 30%. But profit generation is notably widening with the other 493 posting positive earnings growth at 7%. Okay. No, that's a great post, Clint. We get that conversation a lot where everyone's like, it's just the big 7. But our contention, my contention is any move of substance has to start with the big seven. You can't have somebody, it's like, oh, these 7 mid-cap stocks, these random stocks are starting a big move. How? They can't pull the big seven. The big seven can pull everyone else. And so, yeah. Is that right? 33% is where it is right now? Of the core makeup so that's 33, and then maybe because because if you look at Apple and Microsoft is 7 and Apple is 6. If you go to the NASDAQ, Apple is 11 and Microsoft is 10. So 33 for the SPYs. That seems crazy. I'm gonna have to look into that. Okay? So Bob and Steven have gone up to 1.5 on the short term. 6.5. That would be more in line with Apple and Microsoft. 30% of the 500 is huge, even though they've grown that much. Well, you know what? We could actually let's see how up to date. Let's see how up to date Yahoo Finance is. Maybe. Okay, here's that, and let's go to the holdings, and it should give us a percentage. Okay, so this is as of, I think this is as of this should be real time. Apple is 7. Microsoft is close to 7, and Nvidia is 6. Then it drops down to 4 for Amazon, 2.25 for Meta, 2 for Google. Actually, 4 for Google when you add them up. Google's actually ahead of Amazon. That looks right. Let's look at the Qs. No. Look, man, we put stories out. We talk about it. I want to know these things. There's plenty of times I'm shocked by news. Okay, so this is shifted. It used to be more. Now it's 9% for Apple, 8% Microsoft, 7.5% Nvidia. If you look at the top 10. If you look at the top 10 holdings, 50% of the Qs and 35% of the SPY, they look almost identical. Interestingly, right? So, yeah. Yes. Oh my gosh, it's such a weird, I don't know why my screen is so black like that. My bottom bar isn't showing up all of a sudden. Okay. Where were we? We were talking about the sectors. Okay, who's on top? Financials. Is that financials? That's financials. Financials, communication services. There's the S&P, who's slightly behind. Then you've got utilities, industrials. So 3 of 4 growth with utilities still in there. Healthcare is there. Technology's not too far behind, and staples. Okay. Overall, more growth than not at the start. More growth than not at 200 days. Now we go to 133. And then from there, you see this is where utilities just sort of got itself up into that upper position and stayed there. I mean, it has reemerged. So it's not like it just, if it was back down in this area where we have come down from the highs, but this is at new highs. So we absolutely have to recognize the fact that utilities is up there, right? We have to. Where does it go when we get to the score? And now we have financials first, Healthcare is really more blended between growth and defensive. Everyone used to think healthcare is defensive, but it's changed over the last 2 decades. Staples, though, utilities, and then you have industrials surging as well. I mean, we still have both defensives in there, but we also have a good number of growths of defensives in there and growth in there. Do we keep it 0? Do we give it a quarter of a point because financials pushed to the lead? What were we on this? We've just been sitting flat. This one has just been going back and forth, right? Back and forth. I could go either way on this one. Which anomalies? Give me your specifics, press, so I know we can talk about them. Because I don't think it's necessary an anomaly more as just simply we're describing. I mean, we know anything can happen at any time. We're just describing it to see, does it tell us something? Is there something consistent in that behavior? Right now, we just haven't seen where there's a consistent alignment in the sectors that says money flow. This is the consistent money flow. I'm actually leaning a little bit more to the quarter of a point on this one. I'm saying the financials shot up there, and the fact that everything is up there. Let's go back to that question we already asked. If we see strength in defensive sectors, is it because it's defensive or is it because everybody's going up? And when I look at this here, I think everybody's going up. And in fact, this is when technology, who is our consistent leader and who is likely to come back, has been on a bit of a consolidation. But if technology reemerges, then really everybody is going up. And that's where we say, oh, I actually score at breadth. I just talked myself into it. Because I have the ability to see that right there, where I'm like, this is broad. Everyone's moving. More growth and demand for electricity due to EVs and AI. Oh, there you go, Bob. That's throwing that. Okay, who's with me? I am scoring this now to a 0.25. You can say yes. You can give me an amen. You can give me a hell yes. Any of those three suffice. Let me know. I want to make sure everybody's covered. All right. Fair enough. Ooh, okay. Let's finish with sectors and then let's get to the watch list. That's not sectors. Let's finish with the VIX. Okay. Did the VIX achieve anything? Yes. Unfortunately, though, it achieved 2 things. It had come down, and then it did this, and that was technically a higher low. This is a low, and then this was a low, and then it immediately reversed course and did a lower high. But it's at 15. And it seems to be coming this way. Ooh, I don't know. Well, hold on. Technically, also, this is lower than the last one. So it is in the process of making a lower low. I'm giving it a quarter of a point. It feels like it should be higher than a 1 to me. We do have a low. I'm going to give it a quarter of a point more. I was leaning towards it last week. That's what I think right there. Wilbur says yes. Oh, was that yes to this one or yes to the last one? 1.25. What do you guys think? The volatility gets that extra quarter of a point. It feels stronger. It looks stronger. 1.25. Okay. Bam. And there's our score. Okay, I said I thought we could get at least 0.75, maybe a 1. We got it. That's a good recovery strength. Now, I want to flag one thing. One thing. I was just looking back. And then we're going to go to our watch list. If you look back, I have to go further back. I have to go 2 years back just so I can see this. There was a situation. Where was it? In our posture where we improved and then we fell apart again. Yeah, it was August. That was we had gotten down to a 1.75, then we went 2 weeks, and then it paused. Yeah, that feels a little different. I'm gonna take that back. I'm not flagging that concern. This is very different. This is very different than this deep V. That deep V is significant. So yeah, no, I'm happy with our score. I feel like it's reflective of where we are and what we see. Any concerns? Anybody end up? Let's get this. Let's get the range. We don't have. I'm working on a mechanism that'll allow us to like enter scores and have like an official range. But who thinks they're the highest? Who thinks they're the lowest? Put your score out there. If you're higher than me and you think you might be the highest, put it out there. If you're lower than me and you think you might, Michael's a 6. Okay, there's the high range. I would say feeling bullish. Love it. 475 for Steven. Bob said, right? It is a little scary. You're like, wait a second. The market's not that mysterious if you break it down and you're just like, institutions are not fast. We're convinced that they're fast. We're so convinced that things just crash and move and we can never. But then you're like, you know what? I think we can actually just sort of like see this thing. We're very objective in what we analyze and how. I agree with that. Not yet, Stephen, but I'm trying to. So I'd say that as a group, we're somewhere between a 4.75 and a 6, but I'd say 5.25 is probably our median score based on what everyone's saying. A lot of people are the same and with me. Nah, Miguel, that's great. I hope that feels comfortable to you. As a way to use it. Cool. Let's go to the watch list. No, let's do this real fast. Calendar. What do we have? We have a lot packed in. Nothing tomorrow because it's Labor Day. And then nothing really on Thursday. And then on Wednesday or Tuesday. I know what day. I know the order of the days of the week. Come on. Wednesday, we have job openings. They're expected to stay the same, and 8 million is still kind of a lot. Like, we should not look at that as being, it's coming down. Factory orders are expected to have a nice jump. Then we go to Thursday. ADP previous was 122. We don't have expectations yet. Jobless claims expected to stay the same. productivity expected to tick up, employment expected to tick up, unemployment expected to tick down. All that, oh, the weakness, right? I told you where that media perception of weakness came from. It was from one place. So I'm fine right now. I don't think we have that. Reality is our variation is within the range of subjective. That's true. That's true. But I promise you, Bob, we keep it up for a reason. Like when we go back and we look and we say, hey, this is what the market did. We better be able to prove our posture adapts, adjusts, and right gets us in the right place quickly. Where and again, we recognize it's not just the score; it's the direction of the score. And we don't have like oh, if you're a 5, you do this. No, we're just sort of using that as a way to standardize the mechanism so that we can have reference points and understand it. So I get what you're saying for sure. Watch list. Let's hit it. Real quickly, Fed. So that's the calendar. We're 2.5 weeks away now. We're holding slightly above 2-1 in favor of a quarter basis point. Nope. 25 basis point or a quarter point cut. That makes sense. I don't see it. I actually, if we just jump to December, I'm in this 30% camp here. There's a little bit bigger camp that thinks at some point there will be a half of 50. That to me is just the market's typical wishful thinking. We know that this report tends towards we hope it's going to be so good. So I would say that 75 by the end of the year, that makes sense. Unless there's something that spooks them, where some announcement comes out that's a little spooky, where like growth slowing down, and they're like, "Ooh, we better knock it a little harder." I think 25, 25, 25. Okay, watch lists. We're gonna go fast through the watch lists. Bing bang. Here we go. I might take a little bit of extra time. Let's get this back to 6 months. I think Apple's still worth looking at as far as that goes. Amazon, the trigger got pulled. We set it up. Did anybody, I know at least a few people, tell me if you're in Amazon with the alert. Yeah, this is one where a proactive trade is the only thing that worked. If you waited till the end of the day, it would be hard to take. That's why we wanted that one as it crossed. Love it. Love it. This thing is not far from that first target, to be honest. So we'll see what happens. We'll talk about this Tuesday morning and what we do as it gets up there, and if we want to automate an order. And then start making some adjustments. So I'm not going to put that on the list since we're already in the trade, right? It's not on the watch list. It's on the trade list. AXP, hey, any financial that starts pulling back is worth consideration. BAC is still strong. Hasn't started pulling back, though. BLDR, industrials. This is just knocking at the door. Knocking at the door right now, right? So that's definitely the first one from industrial. City, I mean, technically, City kind of gave a weird looking signal, but I didn't do anything with it personally. I'm going to keep it on my list, though. Caterpillar's kind of the same. Didn't really give it. I'm going to put these with consumer. I'm not going to differentiate. That was my mistake. I should not have differentiated. I've been looking at consumer as consumer staples and discretionary, one and the same. I'm going to keep doing that. So anything consumer is on one list. CL is on the list. Just needs to pull back. CMG is on the list. Starting to pull back. I like this one. It's flagging. Costco, I like Costco. More of a pennant, but the same type of a thought process. Carvana, also on that list. A lot of strength in our consumer stocks right now. Yeah. There's the Dow. Fastenal. I would say Fastenal gave a valid signal. It pinched and crossed on your stochastics. The candle popped. Miguel is still riding the little engine that could. I think I can. I think I can. I think I can. I think it's actually valid. It just needs to speed up this time, right, Miguel? Just needs a little more stoking of the fire. Bitcoin, nah. Gold. I'm gonna put gold on my list of materials because if it has a minor pullback and it holds and gets a higher low somewhere between 225 and 228, whatever it is, it's got some strength still. GM, I'll put it on because I think it's strong, but I need a pullback, right? Google, yes. Communication services, that's a nice looking stock. I think still valid, and I think if it crosses 165, we're ready to. You could wait till the end of the day, or you could start setting a line where you're like, hey, this thing already gave me the inside day. Now if it crosses, somewhere through here, you could get that trade starting to set up, right? Home Depot looks good for a lot of stocks in consumer. We definitely don't need any new consumer stocks. It's strong. JP Morgan, the financials are just like, they're running. I got to tell you, if they start cutting interest rates, I might look for a bit of a counter trend trade on the financials if they start to get squoze when the margins tighten up, right? KBH. Put KBH on the consumer list. There's another one. Coca-Cola, if it pulls back, but yes, it's strong. Back to the IWM for a second. Bing. Not quite up to the cup. I need a little more, and then when it gets here, then it's got that last challenge, but it's got to break this 225 convincingly. It never has had the ability. McDonald's is setting up. I think we've got some discretionary coming our way. Maybe Meta looking good with Google. I think we have tech, consumer, and communication services, and maybe even industrials this week. I think we've got plenty setting up. Meta looks great. What are we looking for? Looking for a trigger. Meta was one that with this day here, it definitely had me thinking, do I want to wait for this to either close better or take out? I'm not sure on this one. I don't love waiting to this point. But we'll see. What do I mean a trigger? Where I actually put an order that says if Meta crosses 534, buy this option. And that way I don't wait till the end of the day. It just goes, boom, intraday. Is that what I said, Sandy? Or Heikin-Ashi? Yes, I think you're right. Waiting for the Heikin-Ashi and then taking the Heikin-Ashi trade. I think we are going to do that. I think we are going to maybe look for an alert to come as a continuation, a Heikin-Ashi alert specifically. Which is helpful when you have these shadows that make it harder to find your entry precise with more precision. MMM, I mean, it's strong. It's strong. I am going to put the consumer discretionary and the consumer non in separate areas just because it's such a long list. I can't even write it on my damn note cards. And yeah, I still use note cards. What? MS is strong. Microsoft Technology, beautiful. That was viable, actually. I thought about it. You could have definitely taken this one. And that could also be one that's close as well. So yeah, Microsoft looks good. A notebook. Yes. Thank you. Micron. Micron is good. Netflix. I don't know. That's a tough one. I'm still going to put it on the list, but I don't know what to make of that sucker. NVIDIA. I still like NVIDIA, of course. Palantir. We are already in it, and it looks fine. Even if you got in on the like a little late, you should still be at least break even. If you got a better entry, you should be profitable right now. I think that looks great. I'm actually not going to put it on the watch list because it's a trade. Qs look strong. SPY looks strong. TSM on the watch list. Yes. And looking tradable. So I feel like we've got tradable in technology, tradable possibly in industrials with BLDR. I feel like we have communication services and consumer setting up this week. I think we could definitely have additional, and maybe we get a pullback in financials, right? Overall, the dollar still well underneath where it's been and in a good place overall. Here's the VIX. Let's add Walmart also to our list of consumer. I'm going to put that as a consumer staples. We might have missed that. Look at that thing just busting up out of that old trend. So strong, Walmart right now. XLB materials have strength. That's why I added gold. Communication services looks like it's ready to try to break its. That's a cup and handle right there. What do we look for? First the handle, then the cup. That's what we're hoping for on these things. Energy is actually kind of stable. Financial strong. Industrial strong. Technology consolidated but looking ready to pop. Staples is strong. Utilities is strong. I'm going to call it breadth. And then you have consumer discretionary, which has been lagging, picking up the pace. I'm going to call it breadth. Okay. Trading plan. Where are we on the trading plan? I'm going to have to check. Let me just look real quickly. I completely forgot where we were last week. Shit. Okay. Does anyone remember? I think we were on section 3 last week. Does that make sense? Are we on risk? Or did we do risk last week? Thank you. Thank you, Sandy and Bob. Last Sunday was number 3 for trading rules. This is a reminder. Getting a reminder to water my bonsai trees. Yeah, I have bonsai trees in my office. Everybody should. They're very tranquil and zen. Every trader should have a bonsai tree. We are working on section 4, risk management. What should you be defining? Portfolio heat. What's the most risk you'd ever take at any given time? All positions at once. And that's the risk you take when you have the best possible market and everything is going well. And then everything adapts from there. Trade risk is per trade. What's the most risk you'll have on any given trade? So your portfolio heat might be 12 to 15%, and your trade risk might be 1.5%. That's going to help you to understand how many trades should you have at any given time, could you have at any given time. But some traders work their way backwards, and they say, I don't like to be in more than 6 or 5 or 6 at any given time. So they go from number of trades, then they connect with portfolio heat, and then that helps them find trade risk. So whether you work with trade risk and heat to find trades or trades in portfolio heat to find trade risk, those three all have to connect and align. Obviously, this is critical to us, but we want to give ourselves instructions on how we correlate our trading to our current market posture. How will your risk ebb and flow, increase and decrease, expand and contract, right? We expand and contract. It's just like soccer. I have 2 kids that play a lot of soccer. I coached. When you are on offense, you expand and create space to attack. When you're on defense, you contract and you hold, right? Expand on offense, contract on defense. Same thing with trading. You're on offense, the market's good, you expand your risk, and you make as much as you can for as long as you can while conditions are good. So that when you go back and you look at a market over a 2-year period, and I go back in and I say, okay, look at this 2-year period. I want to know that during this period of time, I did great. Hopefully I made 15, 20%. And during this period of time, hopefully I broke even or only lost maybe lose 3 to 5 here, right? And then I gain 15 to 20 here. And then hopefully I break even on this little guy. And then I can make maybe 5 to 7 on this window, hopefully. And then maybe through here, right? And so you can, so how do we do that? Well, if I'm hoping to make 15 to 20 here, that's somewhere between early November and end of March. What can I point to that says I should have the ability to make that 15 to 20? What's going to help me do that? Well, then I better be able to go to something like my market posture and go back to November when things quickly moved forward like we're seeing now, and then stayed that way, right? 425, 47, 6, 6, 6. We're all through December, all through January, even when it drops a little. We're like, hey, it didn't drop much. We're 6s and 5s all the way through February, all the way into March, all the way into April, and then it starts to show a decline, right? Right through there. Then we're like, okay, now what? So during that's the kind of thing that when we have a 5, a 6, we're opening our risk to levels. We're not like, oh, should I only have 2 or 3? No, get your chips on the table, my friend. That's how. And then when we see our posture dip like it does, we contract. We're on defense now. Get in your shell, defend, and then start to come out and be ready to come out. Right? This is a big thing for me, for how we can, go back in time and be able to say, hey, well, could I go back and show the same thing in this period of time? Yeah, I'll be able to show what are we doing that makes us defensive here, and then gets back into it as quickly as possible. And do we look at this? Yes, we just did it here. You took trades here. You would have taken trades here. So, Press, I'm glad I could give a different perspective that helps make a connection point. So, yeah, I'm glad that expand and contract, man. That's it. That is it. Love it. Okay. That's everything. Sorry for taking an extra 10 minutes of your Sunday, but let's work on section 4. Let's get that risk really well defined. One thing so we have our hedge indicators. We tend to rely on the VIX for our hedge indicators, but if there's ever a component of our market posture that also could be it, I'll definitely tell you. And this is one to just think about. What would have you say, I'm going to take a break for maybe a week and I'll tell you right now, mine is out of my flow. All right, everyone. It's great to see you. Have a great rest of your day. Enjoy your Labor Day. Again, nothing tomorrow. I'm going to go adjust the calendar right now. The meetups, Stephen will be there. And if anyone wants to join him, I think David said he will as well. If you want to go just have a chat, say hello. Other than that, I'll see you guys Tuesday morning. As always, happy trading.